Yeah, good morning, guys. Good morning, guys. Kindly confirm if you can hear me. Drop a one on the chat if you can hear me. All right, good. Yeah, good morning. Great. Okay, so I think we'll get right into this. I don't want us to waste much time on this call. Okay, so at least we can analyze one other pairs aside gold. Okay, so let's just dive right into this. Okay, kindly confirm if you can see my screen, please, before we proceed. Drop a yes in the chat if you can see my screen. And please also confirm my audio quality. Can you hear me clear enough? Oh, perfect. Thank you. I can see a lot of you guys on our private WhatsApp group are consistently printing out cash. That's cool. You can see a lot of you are applying the SMC, the smart money concept strategy. I'm very happy to see that result, the result on the private WhatsApp group. Keep it up, guys. You know, with consistency, of course, profitability is guaranteed. Profitability is guaranteed. Please do well to engage with the live stream by hitting the like button. Um, okay. Good morning, everyone, and welcome to T Billion Forex Academy. If you're new here, my name is Timothy, aka T Billion, and this is our weekly market analysis and trading session where we break down the forex market step by step in a very practical and in a well structured way. We hold this session every Monday and Wednesday by 9:00 a.m. West African time, and our primary focus is XAUUSD, which is gold, followed by other forex pairs you request in the chat. Okay, the goal of this session is to shape and sharpen your understanding of the smart money concept, including order blocks, market structure, liquidity zones, price action, how to properly read market structure, identify key order block zones, and and liquidity areas. Okay, and most importantly, how you can apply these effectively in real market conditions. So whether you're a newbie, you're a beginner, you're a pro trader, stay with me as we will follow a clear top-down analysis process. All right. So with that out of the way, let's do a quick market recap of what market has been doing since our last market analysis session. Okay. So let's head to our chart and look at what price has been doing since our last session. All right, so here is our chart. Okay. All right, so in our last session, if you remember, we were able to mark out these zones as our area of interest, right? And as you can see, of course, market tapped into this very zone here, and this bullish move to the upside, right? Of course, this is our TP, and on this trade, we would have break even on this trade before this reversal, or probably close in partial profit, right? And look at this. This zone was actually invalidated. This zone failed, And like I used to tell you guys that when you have two zones with close proximity like this one, two zones that are very close to each other. Let me zoom in so you can see my screen. I think some of you unable to see my screen clear enough. So let me zoom in so you can see the candles very clearly. All right, I believe this is clear enough. So when you have a zone like this one's, okay, with close proximity, okay, you want to pay attention to the extreme zone, the zone before, which is this. Now, when this zone fails, there's high probability that this other zone will hold. Okay, and look at it. These two zones are quite very close. So if you look at what price actually did, price tapped into the fair value gap of this extreme zone, this very extreme zone. So this trade, the best bet to take this trade is to place a buy limit order at the fair value gap between this zone and this zone, right? When I have two zones like this, okay, I usually place my buy limit order at the fair value gap between the zones, when they're very close like this one or this one, right? I place my buy limit order at the fair value gap. I like to enter multiple position. If you've been following my trades and if you've been following the flips I do on YouTube, you would see that I take multiple positions. It depends on market price action. That is what determines how many positions I stack. Or most time I take 0.1 in 4 places. Now I stack those positions depends on price action within my zone. Now for the first entry, of course, I'll just set my buy limit order at the fair value gap between these two zones, right? I'll set my buy limit order. So once that taps in, right, if price for any reason still pulls down, in this case a little bit, I'll take in another position. Now the moment I you know identify some rejections at that zone, these are what we call rejection candles. For those who don't know what a rejection candle is, like this candle with a long lower wick in the case of a bullish rejection, and in the case of a bearish rejection, it will be a long candle. It will be a candle rather with a long upper wick, just like this green one here. Okay, you can see the upper wick is very long, and for this, the lower wick, is long. So when I say rejection like this, if you look at this is a clear rejection. Okay, this is a clear rejection indicating to you that buyers are present at the zone. It's an indication that buyers are interested in this zone. So you want to, ride the trend alongside, you know, other institutional buyers, right? So that is that basically. So as you can see, price respected the zone and gave us a bullish move. Now, this was what we were able to mark out in our previous analysis session, right? But afterward, new candles were printed on the chart and we're able to identify new order block zones. And this was one of the other block zone we're able to identify. Although price didn't tap into the zone, it just went all the way up, so we kept on following the charts, right? And again, we're able to identify this other block zone here. But again, price didn't tap into this other block zone, right? Now we have this here. Now, look at this. I took this trade and I shared it on the private WhatsApp group, this very trade. I think this was on Friday, right? This was on Friday, yeah. So this trade was on Friday. Price, tapped into the zone and gave this inducement. Now, if you look at it, this zone was kind of invalidated, right? Because price pierced below the zone. And my rule says that when price goes below the zone has been invalidated. But then there are other things you look at. There are other things you look at. If you look at this, there is something I've studied, I have noticed about gold recently. Okay, since the beginning of this year, gold has been consistently stripping available liquidity at key levels before making, the main move. So I was able to quickly identify that on this zone, right? I was able to identify that on this zone. So this is the last swing. Although price broke below this swing level, right, and gave this inducement, right? It went upward like it's about to continue the bullish move respecting this zone. But look at what happened. Price came back to sweep available liquidity below the inducement zone. Right, this is it. Price came back to sweep available liquidity below this, and that is the wick, this candle wick. You can see here, this very one. This candle wick you can see here, it swept liquidity below this low, right? Swept liquidity below this low, right? Created a bullish engulfing. Now let me zoom into my 5 minute time frame so we can, because that's our entry time frame, so we can look at the candle reaction in minutes. All right. Okay, good. And see this. So this is it. Came here, struck available liquidity, and was rejected. You can see this rejection followed by an engulfing candle, a strong, a momentum bullish candle. These are confirmations for me that price is most likely going to respect this zone, and the zone will continue to hold. And that is because, like I told you, gold has been taking liquidity below key levels. I mean, it has been doing that consistently. Takes liquidity, above beyond key levels, then moves in the respect in the what's it called in the anticipated direction, just like what we have here. So I was able to take this buy, right? But I think I took a little profit from this trade. I think some of us too who took this trade took a little profits from the trade, and we exited early enough because it was Friday and ranging was quite irritating. So I just had to take little profits from this trade. Then I exited. Okay, but look at what happened eventually. Now, another reason why I exited the trade was that I anticipated that price is going to use this whole move as an inducement, then sweep liquidity below this inducement zone, right? Then tap into this rare order block zone. This is where I was waiting patiently to, stack, you know, as many positions as I could, because this zone is close to this zone, making this zone the extreme zone, right? Now, for that reason, if this fails for any reason, this is the next line of action for price to react, right? But unfortunately, price didn't get here. It went all the way, and like I said, I took little profits of this trade before the TP was smashed. So that is it basically on our last market analysis and the trade we took, subsequently. Okay, so with that out of the way, if you have any question, please kindly drop it in the chat so I can attend to the question. Otherwise, we'll move to the analysis for today. We check the chat. Good. Are we good? Are we good? Do well to like and react to the live session if you're getting value. All right, so good, good. So let's proceed to today's market analysis. Let's see what gold has in stock for us. So I'll clear the chart. So we have a clean chart to work with. Okay, now this is what we have here. I believe you all already know how we analyze the charts from going from the, what's it called, the daily time frame down to our entry time frame. As you know, we trade our trading time frames are the daily time frame, the 4H, the 2H, 1H, 30 minutes, 15 minutes, and 5 minutes, which is our entry time frame, right? You know how we do our top-down analysis process. So from the daily time frame, you want to first determine the overall, market trend. In this case, gold is obviously bullish, right? Then the next thing you want to do is to identify the most recent break of structure or the most recent market shift, right? Then once you're able to identify that, you mark the origin that led to that break of structure or the market shift, right? Now, as you all know, this for an uptrend like this. Now, this, of course, is the most recent break of structure. This is the most recent break of structure, right? And this would be the origin that led to the break of structure or the zone, the order block zone that led to this break of structure. So logically, you just need to wait for price to come back into the zone, tap the zone, and continue in the bullish, trend. Or there are two levels. There are two levels to this, right? There are two levels to this. Sorry. So price can do this. Price can either come to this, level. Price can come here and continue in the bullish direction, or price can come all the way down here, and continue in the bullish direction. What you should pay attention to is where you have your order block zone, but since we are SMC traders, this is where you most likely want to, you know, identify your order block. But then, of course, if the order block exists around this zone, you also want to mark it out. Price would likely come here. These are like, zone A and zone B. Okay. So this is of higher probability than this, right? I just said I should dish this out here for you guys today. Okay. All right. So that is for, a bullish move. That is for a bullish trend. Now, for a bearish trend, the reverse is the case, like this. One, two, three, four, like this. So now this will be, again, the most recent break of structure, right? Again, you want to wait for price at this zone, okay, this zone A, the high probability order block zone, and wait for price. There's sometimes another order block zone here. You find one, this is B zone, okay? So you literally want to wait for price to, you know, get into this zone or this zone, then you know, take your buy, your sell position and target the next swing level as your take profit. This is where your take profit level should be. So let's say you use a position 2, for example, a short position 2, you enter here. Your SL should be slightly beyond the swing level that leads to this break of structure. Okay, here. Then your TP would be right here. Okay, this swing level. Because of course, since this market is bearish, when market is bearish, it breaks structures, to continue the trend. So we anticipate that price is going to break this structure. We anticipate that price is going to break this structure to continue the bearish, move. All right. So now this is for a break of structure. Now for a market shift scenario, let's look at this bullish scenario, for example. For a market shift, you want to wait for price to take out the last swing high in the case of, sorry, swing low, higher low. In the case of a bullish move, you want to wait for price to take out this, level. So this is what you want to wait for, basically. Price to come all the way down here. you know, take this guy out, then go back to retest the origin that led to that, move. Okay, so this here would be what we call a market shift. Some people call it a change of character. Okay, you can call it whatever you want to. I call it market shift. Okay, this is market shift. Some call it change of character. So this is it, and this is the origin in this case that led to the market shift to be this order block origin. If there's an order block there, most likely there would be an order block, or there's another order block here. Okay, that you would expect price to tap into. This is B zone, and this is A zone. Okay, the A zones are usually of higher, probability. Now this premium value, they are meant for my students, but I just choose to share this with us. I chose to share this with us. Yeah. Okay. So please don't play with this. Don't play with this. I won't go into details on this. Okay. If you want more information on this, you can enroll in T Billion Forex Academy. Then I'll break this down in details. But for now, let's proceed to mark our zones. Let's continue marking out our zones. Let's continue with our top-down analysis process. Okay, so we have 30 more minutes to spend on this live session. I hope this is clear. Identifying your order block, identifying the most recent break of structure and the most recent market shifts. Okay, identifying the most recent break of structure or the most recent market shift. So in this case, on the daily time I can see here is this. This is the most recent structure, right? We'll be very fast. Look at it here. We have a BOS here, break of structure. Okay. All right. So this is the most recent one I can see on the daily time frame. So as usual, we drill down to the 4H time frame to further the zone and also identify other zones on the 4H time frame. Now, I'll refine this further to this candle. Okay, this candle. I'll refine this further to this candle. And this is our BOS. This is our BOS. Structure. But then this is the zone we drew on the daily time frame. So we've refined it further, to the 4H time frame order block zone. But then, like I used to tell you, I'm only interested in the most recent order block zone. And looking at the 4H time frame, this is my most recent order block zone. This zone, I'll mark this zone. Okay, this is my most recent order block zone on the 4H, right? So we have our break of structure right here. Okay, our break of structure right here, and we have our fair value gap, right here, which is very, very little. Okay, but then we'll drill down further to the lower time frame to be very more obvious. Okay, so this is one, right? I'm not going to mark this yet. I'm only interested in the most recent zone because, of course, this is a very valid zone. I think let me mark it out. Let me mark it out. This is a very valid zone. Hopefully, if market, you know, retraces massively, it would probably tap into this zone because we've been anticipating a massive retracement on gold. Gold has just, hit another all-time high, ATH. Gold is now above 5K. Interesting. Interesting. All right, so these are BOS. Cool. Okay, so let's drill down further to 2H to refine our zones. Okay, on the 2H time frame, we can refine this further to this zone, right? This, and we have a very tiny order FVG here, very, very little. Okay, Leave it as it is. This, we'll refine this further to this, right? Then I can see another order block zone here, which is again very high probability because it has a gap there, and we would usually expect gold to come back here and fill up this gap. Okay, so again, our FVG will be this gap that we have here. Okay, and FVG process is simple. I'm going to minimize this guy because I don't think price will come here anytime soon. Okay, so let me just minimize this, but then let's keep it for reference purpose. Okay, all right, so this is it. And now we have this FVG fair value gap. I think I'll create a video separately to explain the concept of fair value gap, what it actually means in SMC. Okay, so you guys will not just only be identifying it, you understand why it is effective, why it does what it does, why it is very, very effective. There's a reason behind it, there's a concept behind it that makes it work the way it works.